Today is the dawn of a new era in finance. Crypto Week officially kicks off in the US House, and the atmosphere is electric. Lawmakers are taking up three monumental bills: the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance State Act that could redefine digital assets forever. At the same time, Bitcoin has blasted past the $123,000 mark, an all-time record fueled by institutional inflows and a surge of optimism that crypto is finally gaining mainstream acceptance. This moment isn't just another headline. It's a breakthrough that signals a major shift in how money works, and you're watching it unfold live. Behind Bitcoin's record surge lies an explosive wave of institutional backing. ETFs alone have pulled in billions this month, with major funds and corporate treasuries snapping up large positions. This isn't speculation, it's strategic capital moving into crypto as a stable long-term store of value. The funding rates in futures markets show that even leveraged bets are cooling off, replaced by sober, sustained investment. Crypto is being welcomed by big money players who see it not as hype, but as a pillar of tomorrow's financial system. The Genius Act, now moving through Congress, focuses on stabilizing the stablecoin sector. It mandates full reserves and strict audits, turning what was once a wild west of digital money into a reliable foundation for commerce and payments. When that passes, imagine buying groceries or streaming services using a stable, trusted digital dollar. Approved, regulated, and backed. That shift alone could push crypto into mainstream daily life, and we're standing at that threshold now. Meanwhile, the Clarity Act and the Anti-CBDC bill will draw the legal lines on who governs digital assets and whether a government-issued digital dollar should exist. If passed, they'll mark the first real legislative framework for crypto ever seen. Investors can finally plan with confidence, tech innovation can flourish, and you, the viewer, can tap into trends without guessing. This is changing how the world sees money, and it's happening now. But there's more. Trump's March executive order created a strategic Bitcoin reserve, a national crypto stash held by the Treasury. Together with other decentralized coins in a digital asset stockpile, the US government is treating crypto like gold or oil. That sends a powerful message. Digital assets now hold strategic value. It's proof that blockchain isn't just a trend, it's a global asset class woven into national security and economic strategy. Outside crypto, Wall Street is gearing up for a pivotal week. Major banks are about to release Q2 earnings: JP Morgan, Goldman Sachs, Bank of America, Wells Fargo. Analysts expect strong trading desks fueled by tariff volatility, but the real story will be how much they earned, how much they're setting aside for potential loan losses, and what it means for the broader economy. These numbers matter to you as an investor or entrepreneur. This is your snapshot of where America's money is flowing today. Alongside earnings, the latest inflation, CPI, and retail sales figures are due this week. Economists expect inflation around 2.6% year over year, and retail spending could show whether Americans are holding tight or splurging. A lower inflation print may reopen the door to rate cuts, easing pressure on mortgages, credit cards, and consumer loans. That ripples through everything: stocks, bonds, crypto, and yes, your own wallet. Trade tensions are still simmering. The U.S. has announced steep tariffs, 30% on EU and Mexico goods, and threats of 100% on Russia. Despite this, markets have held steady, the dollar is strong, equities are flat to positive, and crypto remains unscathed. That resilience speaks volumes. Digital assets are gaining credibility as safe havens amid geopolitical worry and economic uncertainty. Hedge funds are shifting strategies too, exiting long positions in banks and moving into consumer staples, but crypto-related stocks like Coinbase and Marathon are climbing alongside Bitcoin. Even before earnings hit, investors are dialing into crypto's momentum. Traditional markets may wobble under macro stress, but crypto is riding a surge. That pivot reveals where the smart money is going, and it's a lesson worth watching. Meanwhile, money market funds are preparing for a tidal wave of new T-bill issuance, over $1 trillion expected in the next year and a half as the Treasury replenishes cash. Even that strong short-term supply is being absorbed, showing that confidence remains in U.S. debt instruments. If markets tighten and crypto continues its rise, savvy investors will balance safe bets like T-bills with high growth potential in digital assets. That's strategy in motion. Amid the macro noise, Ethereum is staging a powerful comeback, pushing above $3,050 and signaling renewed strength across Layer 1 platforms. Its performance is backed not just by investor confidence, but by network fundamentals. Transaction volumes are rising, staking rewards remain strong, and L2 integrations are becoming seamless. With Ethereum's EIP upgrades reducing gas fees and scaling steadily, investors are flocking back to what they view as the backbone of decentralized finance. Ethereum is no longer chasing narratives, it's leading them again. DeFi is also booming. Aave's total deposits have now surged past $50 billion, marking a new high for the decentralized lending sector. That's not just token speculation, it's user activity, collateral volume, and genuine financial utility. These platforms are rebuilding public trust with better UX, lower risks, and smart contract audits. DeFi is evolving, and it's starting to compete directly with traditional banking services. When you realize you can borrow, lend, earn, yield, and self-custody, all without a bank, you start to understand why this movement is growing exponentially. Even meme coins are making headlines. Shiba Inu spiked over 3% today after increasing its token burn rate and announcing major metaverse integrations. While many dismiss these tokens, their communities wield enormous social power. SHIB's recent burn mechanics have driven scarcity narratives, and its price action, though volatile, serves as a retail barometer. When meme coins rally during a bull cycle, it's often a sign that liquidity and optimism are back in full force. It's a reminder that emotion and belief remain powerful drivers in financial markets. The NFT sector, once pronounced dead by critics, is also seeing green shoots. Trading volumes have quietly crept back, with select collections doubling floor prices in 2 weeks. Platforms like Blur, OpenSea, and Magic Eden are experimenting with new models, and gaming studios are integrating NFTs in ways that feel natural, not forced. While it's still early, this revival isn't about hype, it's about utility, integration, and culture. NFTs are no longer just art, they're tools for loyalty, access, and identity in a digital world. Regulatory shifts are also going global. Kazakhstan is drafting plans for its own digital reserve of Bitcoin and Ethereum. The Czech central bank has acquired a minority stake in Coinbase. Switzerland is reportedly debating whether to include Bitcoin in its official national reserves. When nation-states begin holding crypto, it's a clear signal to pay attention. We're no longer talking about fringe tech. We're talking about sovereign strategies based on digital scarcity and monetary decentralization. Retail investors, too, are waking up. Daily signups on major U.S. crypto exchanges are surging. Wallet creation is at a 6-month high, and Google search trends for how to buy Bitcoin are up 70% this week alone. This wave is different. It's not just hype-driven. You can feel the hunger for understanding, the desire to build portfolios, to gain real autonomy over assets. Financial literacy in crypto is accelerating, and this time people want more than profits. They want control, clarity, and conviction. In the tech world, AI and crypto are merging in exciting ways. Several protocols now offer decentralized AI compute marketplaces where you can buy, rent, or monetize GPU power in Web3 native environments. These innovations are building the foundation for the next internet, one that's intelligent, decentralized, and transparent. If you've been wondering where the next trillion-dollar startup will come from, it might just sit at the intersection of crypto and AI. Meanwhile, traditional finance is watching carefully. Banks are hiring blockchain analysts. Brokerages are listing tokenized assets. Hedge funds are testing automated strategies powered by on-chain data. These aren't experiments, they're early-stage integrations. As regulators catch up and infrastructure matures, expect the lines between Wall Street and Web3 to blur even further. And when that happens, the advantages go to those who are already positioned, already educated, already inside the game. This moment we're living in, it's not just a news cycle, it's a turning point. The old economy is being remodeled right before our eyes, and the new one is being built block by block, code by code, on chain. Whether it's through legislation, innovation, or cultural momentum, the movement is clear. Decentralization, digital value, programmable trust. And if you're here watching this video, it means you're not just observing the shift, you're part of it. And that's powerful. So take this energy with you. Use the momentum of this moment to dive deeper, to learn more, to take control of your financial journey. Don't just consume headlines, build conviction. Don't wait for permission, move with purpose. Because the future of finance is being written now, and it's being written by those bold enough to believe in it. Stay focused, stay curious, stay in the game.